Now, for all of you digital nomads and global entrepreneurs out there, this video is for you. Now watch the whole way because you're going to learn a lot. Now, what is the main differences between a digital nomad visa and tax residency? First of all, digital nomad visas are on the rise. Many countries are offering different versions of them. Some of them are offering a different version every year. What that means is that it's constantly changing, whereas tax residency often stays the same, it's a little bit more solid. So let's go through it this video, because if you make the wrong mistake, you might end up paying tax in 2 jurisdictions at the same time, leaving you with hardly any profit. What is the point making 1 million a year if you can't keep it legally with compliance, doing the right thing in the right location? So let's go into this video. It's going to save you a lot of money and maybe you're going to get some good options. So a digital nomad visa, something that I expect to be on the rise a lot. Remember, these have only really come into play the last 5 or 10 years. So this is an indication of where the future is going. But anyway, they are immigration tools that allow a foreign national to live in a country while they work remote for their clients or employer abroad. Examples of a country that offers them: Portugal, which recently changed its rules, which changed up the whole game. That is why I said that digital nomad visas are changing all the time. They're not the most secure option. Spain, Barbados, Estonia, Costa Rica, and many more. Thailand and Bali, for example, have come out with their own versions of digital nomad visas. But again, like Thailand, they have changed it recently. Now, all you need to be accepted for this is a stable income, remote income, health insurance, and clean criminal record. Now, if you have employees or any type of business within that land, then you're not going to be eligible for a digital nomad visa and you will be falling into the tax residency. Health insurance, clean criminal record. For the most part anyway. Maybe there's 1 or 2 countries that can look at the other way, but we're not going to go through that this video. And again, it's important to know that a visa does not equal your tax residency. They are different. Having a visa might mean that you still get taxed back home in the UK or America, so you've got to be careful. Now, what is tax residency? Tax residency simply determines where you're legally required to pay tax on your worldwide income. The most common rule, which we see in the UK as an example, because that's where I'm from, so I can give you the most knowledge from there. 183-day rule, half a year obviously. If you stay over this, then you are a tax resident, legally. Now, other criteria which they will look at is permanent home or habitual residence. What that means is, where do you stay for most of the year? Personal and economic ties, the center of your vital interest, your family, your workplace, your nationality and long-term status. Oh, and also I should put this in here that many countries are tightening their regulations for this specifically. Again, I'm going to use them as an example going this whole video, but England, they're going to tighten up the regulations because they want to keep you in the country. They want to keep you paying taxes. It's very simple. So to get around this is, you have to go through a couple loops, but luckily in our company, we help you do that. What you can do, you can hold a digital nomad visa, but not be a tax resident. You can be a tax resident without a digital nomad visa. Example being, you can stay in Portugal, maybe only 2 months, 3 months, and you will not be taxed, even if you have the visa. And also, vice versa, you can be taxed without a visa. For example, if you lived in Thailand for 9 months on a tourist visa, it means you have the right to stay. Tax residency means you have the duty to pay. Now, what many people get wrong, and which they're going to gloss over when they try to sell you a passport or a nomad visa or something like this, or something like a citizenship by investment. So let's go through the real truths. Myth number 1. If I work for a foreign company, I don't owe local taxes. Nope. Your residency will trigger worldwide tax liability. And again, I expect this to get more tight and more secure, so you need to make sure whatever option you pick, you're doing it the right way with compliance and work with a company like us, because we're not just going to tell you, okay, here, do this and give you a little bit of advisory. No, we're going to actually hold your hand and do the whole thing for you if you decide to work. Another myth. If you have a nomad visa, you are exempt from tax. Nope, they are just permits to stay, not a tax shield. For example, another example would be, if you were staying somewhere for 5 months, 6 months, 8 months, 9 months out of the UK, you still have to pay the UK taxes. All it means is that the other country allowed you to stay in their country. But if your bank accounts, if any part of your company, if you have many connections are still tied back to the UK or Germany or France or America, they have a liability to get you for tax. Another myth, paying taxes at home covers me everywhere. Nope, you also risk double taxation. Like I said, if you stayed in some places for over 8 months, over 6 months, then they have an option to tax you. Let's look at some real world examples, right? Let's say you go from UK to Portugal on a nomad visa. You stay in Lisbon for 8 months. Now you're going to assume that your remote income is safe and tax free. However, Portugal will count you as a tax resident. You pay UK plus Portugal taxes until a treaty is applied. And reversing that can be a lot of legal problems. Another common example is the US to Costa Rica. US citizens remain taxed globally. A US citizen, more often than not, is gonna keep on being taxed globally. Now, if a Costa Rican tax authority see you as a resident, you have a risk of being taxed there as well. A lot of complexity, double filings is typically a place you don't want to be. And now, it's not all doom. You do have options around this, but you need to tread on careful water. Crypto entrepreneur, let's say Spain versus Georgia. Spain, high tax, wealth reporting obligations. Georgia, one of our favorite nomad countries that I spoke about in another video. Georgia is low tax and very crypto friendly. Now, it's the same visa strategy, just radically different outcomes. Remember, these Western countries are in freefall. When you have nation states in freefall, what do? They get more violent. Now, in this day and age, we're not in the feudal era and we're not in the industrial or medieval era. So you're not going to have a knight come and pitch you up or something. What they are going to do is send you more letters, perhaps send bailiffs to your house and give you tighter regulations with paperwork. Yes, it's a fucking nightmare. That is why on this channel we talk about being a sovereign individual, a sovereign business owner, operating across borders for yourself personally or for your business, doing this in the best possible way with the best possible connections, right? You cannot afford to do this sloppy. You cannot afford to just rush it. One wrong move, one wrong service, one wrong person who helps you can cost you literally millions and loads of opportunity cost. Working with the right people is extremely important. That's why we do everything. With that being said, go down to the description below and apply for Alavia Vel. You're going to have first class seats to any options that come up in the future, and you get the opportunity to be a founding member. I'm not going to speak any more about that because we're keeping it on the low. But yeah, let's carry on with the video. Remember, we went over a video the other day of speaking about more than 10 examples for you in your specific business situation, what is best for you. So one of the ones I recommend people, especially if you're a finance expert or you're really high level, just focused on business, would be somewhere like Singapore. But on this list, let's go over some of the most popular. Portugal, they have a nomad visa. The tax status, very high tax, unless the NHR is applied, which the NHR has been reversed this year, sadly. Risk level high, as we just said here, the regime can mitigate. Spain, you have your nomad visa, very tax heavy, wealth reporting is one of these countries that are just anti-wealth. Risk level very high, is a holiday destination, not the best country to end up living. You have many better options. It's often a trap, right? Georgia, visa is short stays plus tax program. Now, this is not entirely true, right? This was a bit of a mistake when writing because many countries can go to Georgia for 6 months without a visa. That's not really a short stay. Tax status, low flat tax, 1 to 20%, and even if you get to this 20%, it can be mitigated down a lot legally. Not high risk level, very low. Crypto friendly. They have crypto ATMs in Georgia. Now the UAE, one of the most popular ones, everyone's going there and I understand why. The visa, freelance visa and a golden visa options, which are good and they serve different purposes. 0% personal tax, but we have reports that they are going to increase corporate tax in the future, and I can see some changes with Dubai and UAE have been a complete golden standard for all of this. But in life and in history, you learn that these things do not carry on forever. I, for one, predict that in the next 5, 10 years, maybe even 15, they're going to introduce some sort of tax burden. Risk level very low for now, but also very expensive setup. Now, Panama, it's a very friendly nation for visa. They have a territorial tax system, very low risk level. It's a good long-term option. With you want to set up your banking, your business here, very good option. Let's quickly explain what a double taxation treaty means. Now, to prevent double taxation, you can do it, but it's not automatic. Often, you are not going to succeed when you have crypto games, self-employed freelancers, or remote service businesses. If you do not claim treaty relief properly, you're going to pay twice. Again, you should not rely on yourself to do this. You should work with a very good lawyer or a company like us who can put you into contact instantly with any lawyer. Exit tax warnings. Leaving a country improperly can trigger exit taxes. Now this is, again, many people gloss over this, they don't speak about it. Examples: France or Canada, you can get exit tax on unreleased capital gains. US, your extradition. US, it's something similar, tax for giving up your citizenship. Strategy: you need to plan tax residency before severing home ties. It's the same when setting up a trust. You don't set up a trust when you start bleeding. You set up a trust in case you start bleeding. So, how to mitigate this in advance? The playbook we suggest for you is a Nomad Playbook number 1, where you get your offshore plus your visa set up. You have your base company somewhere offshore like the BVI, Nevis, etc. That means that your company and your tax is mitigated. Use your Nomad visa for a residence. Pay taxes only where structured. Right, you will then only pay your taxes because it's structured over here in a company offshore. Now, 2 option: have a trust and your residency shopping. Establish a trust for your assets like I spoke about a minute ago. Move between 2 to 3 residencies yearly. Avoid becoming a tax resident anywhere. Now, I know from experience that this may sound good, but as you get through it, you're like, oh, do I really have to leave every 3 times? You're going to be spending 4 months. That's not for everyone. Some people love it. Some people it's very easy for them. For example, if you have a network-based business and one time you need to be in Asia, then you need to be in Europe, and then you need to be in Dubai, it can work very good. Playbook number 3, have a special regime set up. For example, the Portugal NHR 10 years tax benefits is not here anymore. Georgia 1% small business regime. Italy's flat tax for high net worth individuals, and many more. So you can go somewhere where you are treated good for tax and residency. So ask yourself, get a checklist ready, get a pen and paper. Have I triggered tax residency? Have I spent less or more than 183 days in one country? Have I rented or owned a local home? Have I opened any bank accounts? Have I registered utilities, memberships or family ties? Do I have any continued very strong ties in my home country? If more than 2 boxes are ticked, you're very likely a tax resident. Now this matters for many reasons, but let's go over the most brutal. If you do not distinguish a visa or a tax residency, you can create a double taxation. Compliance penalties, higher global tax burdens. This is a situation that people do not want to be in. Now here's a question for the nomads and global entrepreneurs. Where should you establish a primary tax residency? Do you qualify for a treaty benefit? What are my reporting obligations? Should I restructure my income? These are questions you need to ask yourself, and asking them sooner than later is going to save you a ton of headache and a ton of money. Now, for sure, you realize now that the best option is to align your visa and your tax strategy. Now, of course, at our company, we help you connect immigration and taxation into one global strategy. Oh, and by the way, sign up for Aliva Vel if you want a 1 to 2 hour full planning session and you get everything you ever need. Now, what do you want to consider? Travel patterns and thresholds, local tax laws in host countries, double taxation treaties, exit tax risks, optimal structures for reporting remote income. Having this ready and planned is going to be a huge relief on you, trust me. Because everybody feels like, oh, nomad, oh, digital entrepreneur. It's so good until you get the letters in the post, until you speak with your tax man, and then you understand. But here's the good news. It's not all bad. With planning, you can minimize your taxes legally, you can stay compliant, and you can leverage the treaties and special regimes that are in place to benefit people like you. So one last time, to be very clear, a visa does not equal tax residency. A digital nomad visa equals right to stay in that country. A tax residency means you have a legal obligation to pay tax. Now, what should be your next step? At Forward Point Solutions, we specialize in helping global mobile individuals, not just with locations and stuff like that. We do the full bang. If you want to set up bank accounts in any more than 60 jurisdictions around the world, if you want to secure your payments, if you're in a high-risk business, if you want to get trusts and estate planning, we are the people. Now, I see many on YouTube who talk about tax and location. Many of these have just working with one jurisdiction. Maybe they're talking about Cyprus or Dubai and they want to get you to come and do citizenship by investment. Luckily with us, we work with the whole shebang. We have more than 200 banking partners worldwide. We generally want the best for you. We're not trying to usher you into one corner. And of course, we understand the exposure across borders. We align your visa with a tax strategy. We align visas with tax. We protect your lifestyle and financial options. Now, if you want to explore more and you want to talk to me, go below, check out the email, check out the website, and have a great day.